Hi, everybody. My name is Matt Brown, and welcome to the Direct Private Investment Show, proudly presented by Carapin Investment Bank. With me in the studio is Nash Roberts and Bruce Roberts. Gentlemen, welcome to the show.
Matt, great to be here. Great to be here.
Please fill our investor community in on what exactly do you guys do at Carofin. Bruce, let's start with you.
What we do is fairly simple. We raise private capital for small to medium businesses, and we raise that capital from high net worth individuals, family offices, and private funds. How that gets done isn't so simple because, as I think we'll talk about in this segment, we cover a broad range of industries and have since we started doing this 27 years ago.
Cool. And we're going to double click on that in one moment. Nash, what keeps you busy at Carofin?
Yeah, so within my role as a vice president of sales and syndication, what keeps me busy is trying to understand criteria of various investors that we work with, and that can be, all the way to an accredited individual investor that's looking to take a portion of their portfolio and direct that into direct private investments, through to family offices that have focus within the privates world, and of course up to institutional investors that have a various investment team that may intersect with the companies that we're representing.
Okay. So Bruce, you touched on a generalist approach. Why is that important for our investor community?
Well, I think there's things you can control in your investment approach, and there's things that are always surprising. What you can control is diversity. Getting diverse exposure to a number of industries and is just a healthy way to go, I believe, to go about things. The world changes, right? One year, for example, the airline industry might be the most solid place you can be, and the next year you have COVID and the whole industry is reeling. So to the extent that you diversified yourself in the process of building your portfolio, then that sort of naturally will insulate you from, certainly the major unexpected events that are inevitably happen in, as history goes along. So, I also would say the private investment market by its nature offers a chance to diversify from market risk, from, it's less correlated to the public market. They tend to be absolute return investments. So to the extent you have a huge exposure in the broader portfolio you might have to those investments that track public market trends, then, having a complementary portfolio of direct private investments, gives you some diversification.
Nash, that's a really important point that Bruce landed around how markets do change, and what's hot today doesn't necessarily mean it's going to be hot tomorrow. So while specialism is great, there's also the sort of advantages that investors receive by you guys helping them to understand broadly what is happening in the market at any given point in time. For instance, cosmetics. Nash, could you give an example of the types of industries that you have touched on over the last sort of 27 years as an investment bank, and maybe touch on some of the key insights that you guys help investors realize through adopting this generalized approach to alternative investors?
Absolutely. So Bruce touched a little bit on our focus within the maintenance, repair, and overhaul segment of the airline industry. And so there's been a lot of opportunities in terms of parting out airplanes, providing capital to distributors in that space. And those can create some really interesting and unique opportunities for investors. We've worked a lot within the agricultural sector. And so that's everything from the sweet potato industry here in North Carolina and all the way through meat processing and frankly, different segments of the processing for agriculture industry. Also, as you mentioned, we work a lot within branded consumer products that can range everything from craft spirits through to cosmetics. And frankly, the way we've been able to do that is to provide additional capital to very focused sector-specific investors in the space, whether that's a family office with domain expertise or a growth equity fund as well.
And are there certain industries, Bruce, that you guys have found yourselves, playing in more regularly than, say, others?
Sure. Well, first of all, we happen to be a national practice, so we touch investors across the country, and by extension, we see deal flow from across the country. And I think, in our case, because we touch roughly, 7,000 individuals on a monthly basis, and so our deal flow is coming to us through that network. It also sort of follows that those individuals who've generated some wealth often did it by being pretty good at some industry sector. So we're at an advantage in that we can leverage their expertise. So while we take a generalist approach, we very quickly assemble a team of specialists who can help us get smart quickly. But, to your point, we have had certain sectors that just sort of naturally show up. I think part of the reason for that is once you've done a deal in a certain industry sector, word gets out in that sector that, hey, these guys can raise capital, and they start telling, their buddies, the other folks they know, and voila, we start getting phone calls. It is certainly true that once you get a transaction done in one sector, there are certain things you learn that provide an advantage. So, but I wouldn't want to be lost in the sectors. There is a necessity for sector expertise when you're bringing a transaction. We're uniquely suited because we can be generalists, because we can assemble that expertise of those sectors where we've done more, whether it can be, again, aircraft repair, whether it's going to be agriculture. We've actually done a lot in medical diagnostic technologies. Some of that's just a quirk of history, frankly. Those deals came across, took them on, got them done, learned, and you build on that knowledge base. So naturally, we look for more transaction in the space. The other thing that tends to drive deal flow, of course, is just where is society? Right now, we're at a period where everything is about renewable and sustainable and ESG. We are involved in a number of things that relate to the renewable sector. We would naturally want to do more because that seems like it's going to be a long trend. So I guess that's sort of the other thing that underpins our deal selection and may make it look generalist, but yet it's guided by where do we think the planet's going or the United States is going. So for example, reshoring is a big theme right now. 80% plus of American companies that have international activity are trying to bring at least a portion of that manufacturing back to at least North America, if not continental United States. Well, given that we've gone through 30 to 40 years of offshoring, there's a huge opportunity to invest in local businesses, or at least U.S. domiciled businesses, or some manufacturing or logistics or supply chain relating thing in the domestic. So it's always a moving target. It helps to stay current on where the press is. I would say it also helps. I think it's worth having your own view. You take in as much information as you can, but if you're chasing the latest fad, the chances are by the time it gets on your doorstep, it's pretty well worn as a fad. And the point in both cases is invest in things trust your gut. Start with what the consumer is looking to acquire. Who's going to be the customer of this particular company? And don't discount your own personal experience because it can lead to some pretty attractive investments, across the board.
And I'd say another point that I just want to make sure is clear is, the firm's been around for over 25 years. And so there's a fairly extensive network here where if a given company comes through across our desk, we can fairly efficiently get it in front of one or multiple, former senior executives at, large or publicly traded firms to do an initial sanity check on, how do we rationalize this as an investment opportunity? And that's a really great way to kind of, as sort of a starting place is like, okay, this checks some high level boxes and it's worth to keep digging here. And so there's usually, a larger network conversation around a given issuer that we're going to mark a list prior to ever it hitting, an investor's inbox for investment.
I think there's two stories here, two messages here. One is, yes, build diversity in your portfolio within the direct private investment space to the same extent you should in any collection of investments you make. But for that individual investment, it is going to take a certain level of industry or domain expertise to make sure that the investment, or to best make sure that the investment that you're making, at least in terms of its general positioning in that marketplace, is appropriate.
There's a lot of information that you guys have to, I imagine, stay on top of, market movements, trends, and so forth. So your network, given the fact that you have been running as an investment firm, specializing in this space for 25 plus years now, this role of network is really important for investors to be able to leverage. Because to your point, Nash, let's just say that life sciences or a particular subsector of life sciences starts to become very topical. In other words, there could be something in the protein transformation space that's, that the industry of protein transformation could be projected to be 1.4 trillion in the next 10 years, and it's only at, 400 billion now as an example. that insight is often derived through your network and through other information sources that you help investors leverage when it comes to understanding of these 12 industries. For instance, here's why this particular investment opportunity makes sense given the trends that are currently in that particular industry.
Yes, we do that. But what I've observed over these years is you can take about any industry you want, and there will be some small number of factors which you're probably not going to read a book. You're certainly not going to get in an MBA class. The only way you're going to learn this is by being in the industry and doing it. And that's really what I look for when we're looking at any industry. I'm trying to figure out by talking to individuals who do have that expertise and that time and grade, that experience, what makes or breaks a participant in this industry. And it's different from every industry. And hopefully an offering document, well, it'll describe the overall offering. It might describe the industry. It certainly should describe the security. But behind that, in the due diligence and the preparation doing to bring that deal to market, there's just something you need to know. And that's kind of the magic sauce for a lot of these investments, to know if you're in the zip code of having a chance to be successful. And if you get that right, that's no guarantee that the company's going to be successful, because you still got to manage it right. It's got to be capitalized. The supply chains have got to work, et cetera, et cetera. But on a starting point, are you in the zip code of having a chance to be successful in that industry with this investment? There's going to be something there you need to know, and you just got to stay curious.
So Nash, I'd love to bring you back to the conversation here. What role does private capital have in certain industries versus, say, capital from traditional lenders or public markets?
Absolutely. So agriculture is a great way to point out that opportunity. So what we see a lot across the board is kind of the shrinking back traditional lending to agricultural operators. And that provides an interesting opportunity for private investors where we can create working capital structures to help finance a business, an agricultural business in the short term, which, if all goes well, provides a compelling return for an investor for their portfolio if they're seeking yield. Another great example is what we've seen a lot, particularly within the metallurgical coal space, is that coal, where, for very understandable reasons, has been demonized by the broader, financial world because of its impact on climate change, or perceived impact on climate change. Well, we're still forgetting that we can't make steel without met coal. And so we still have to mine metallurgical coal because we're still going to use steel for the foreseeable future. Well, as larger institutional capital sources shrink from financing coal projects for metallurgical purposes, that provides a really interesting opportunity for private investors to capture opportunities in that segment.
Really, you're hitting on something that's pretty critical to why there's value in direct investments. Is if you're investing in a competitive marketplace where the market has moved that direction, well, it kind of stands to reason that the available returns are going to be diminished, right? I don't think it's necessarily a contrarian approach to look in other directions. It's just a broader scope. And, there's also sort of the whole issue of there's so much capital in the capital markets that's looking for an investment, that's looking for a home, if you will. They're really limited in the places, the kind of bets they can make within their portfolio. So you show up as a smaller investor, many more opportunities for you, many more opportunities where capital is not competing to finance that opportunity. So it stands to reason that the terms that you end up with are going to be more attractive. Still high risk, of course, but to me, it's always made sense. Why by choice go participate in a more competitive, potentially lower yielding market when there's just this enormous, market for, if you look at the denominations we're talking about, which for our transactions are typically $2 to $20 million, it's just a very uncompetitive space, and the world's kind of your oyster in terms of picking and choosing deals. I've sat on panels with private lenders who are managing, large multi-billion-dollar portfolios, and they talk about the competition to make loans, and now they have to give up yield, they have to give up covenants and things like that. And I kind of look at them and go, well, that's just not part of my world. we can more or less set terms. And really the issue we have is you don't want to be too aggressive in setting terms because you want your issuer to be able to meet those terms, right? But you sure as heck need adequate terms to protect yourself. So less competitive market, more yield opportunity, more chance for diversity, et cetera.
So Nash, in closing, what's your view on what has been discussed?
Sure. So part of our challenge as an investment bank, right, when we bring an issuance to market, we're having to effectively paint a picture, tell a story as to why this is a compelling opportunity. We're also talking about a direct investment, so a specific issuer within a given industry. And so what we're trying to do is framing the conversation around, okay, here's an industry. It could be agriculture. It could be, like I said earlier, metallurgical grade coal. It could be cosmetics. Here's why we think this industry is compelling. We think it has strong trends moving forward. But if you're going to make a specific bet within the given operators of an industry, here is one specific one that we think is particularly compelling that we're engaged to raise capital for. And so that's part of our challenge as an investment bank is we're putting things in context. We're framing a conversation around an investment decision for the given issuer.
Okay, get you. Thank you, Nash, for those insights. Bruce, to you as well. Thank you, everyone, for tuning in. My name is Matt Brown, and we'll see you again soon.